Hello and welcome back to Stock Market Weekly. What a week. It felt like a bear market sort of week, especially the second half, right? Let's call it. It felt like tons of volatility. We saw the momentum trade really get hammered on Friday. Precious metals, just historic moves, rotation, earnings reports, big moves, some important technical patterns here that are forming that we want to pay attention to. So we're going to talk about all of that. Let's get into it. It was busy out there. Our sponsor of this episode is Investors Business Daily. We've got two introductory offers in the description of this episode. Once you get done watching, check those out and see if you can claim some discounts. So our journey starts here with the Fed meeting that we had on Wednesday. So this really wasn't anticipated to be a live meeting. We expected rates were going to be left unchanged, and they were. I will say, the commentary and rhetoric out of Jerome Powell was just a lot more comfortable, kind of steadfast, very happy with where policy is relative to the economy and the outlook. And so we felt, a little more kind of hawkish, or at least just kind of steadfast in his approach. Now, we could say that it doesn't matter too much because on Friday, we did get the new Fed appointed. Warsh here is someone that is very experienced. I know he was traditionally sort of an inflation hawk and really subscribes to kind of smaller Fed balance sheets, but I don't know where, that stands now and if a lot of that is still relevant. He was part of the Fed during the financial crisis, so he is well versed. He's used to serving on the committee. He knows how this runs, so it'll be interesting to see, especially next week and the next couple of weeks, how the market starts to price in and how we start to get more commentary about this transition that'll be happening in May. Now, Friday, or really all this week, not just Friday, we saw a tremendous amount of FX volatility, US dollar volatility. We had a very steep breakdown here, followed by a pretty sharp reversal. These are big moves for a dollar index. We're going to talk more about that later, but this is certainly, all at the heartbeat of what's going on with precious metals, interest rates, and sort of the outlook on the broader economy. Now, looking at some of the other catalysts this week is we had many earnings reports, right? So Apple had a very strong beat. The stock didn't react a whole lot here, so it was basically stagnant here, but it held in. I think the market is just digesting it, still trying to figure out maybe the AI plan that is underway, but they did have, just again, good numbers, good growth, certainly from what analysts were expecting. Meta also kind of hit it out of the park here, and this is one of the ones where it really did depend on if they could show and point to some type of ROI on all of that CapEx expenditure. And they did a good job at showing the efficiencies, dollars coming in were still very strong, and they are talking about already seeing payoffs, and we're not just spending into a black hole. And the market seemed to like that, right? They seemed to take it in stride. Now, of course, on Friday here, we did kind of fall back to the lows. You've got a big kind of juicy earnings gap here. So, it could be filled, but generally speaking, a very positive result out of Meta. Microsoft really was the other side of the story. I think this was one of the big distinctions because Microsoft's numbers were fine as their growth was low, or at least not to the expectations of the street, and their CapEx and their spending and where they are on sort of this AI treadmill was a little more unclear. It was kind of confusing on the earnings call. Their relationship with OpenAI is confusing to most people and analysts even on how that whole arrangement is structured. So I think they really got hit into the penalty box here, and they had one of the worst single day declines going back a handful of years. Tesla also reported earnings, and again, kind of like Apple, basically just stayed exactly where it was. This conference call was really focused on the future, the transition of Tesla, basically producing or putting a North Star of abundance for all, and really focusing on their energy business, autonomous rollouts across more states this year. And then the big elephant in the room, of course, is robotics and Optimus. There's also now a conversation about XAI. There was an investment from Tesla, and then also with SpaceX coming IPO, and then maybe some XAI merge or joining of all of these, Musk businesses. Needless to say, I mean, stock seems comfortable where it is, and, it's just going to be a long road to get where the vision is. There's a ton of capex being spent over the next year. I think upwards of 20 billion as Tesla invests in a handful of different factories. We are going to look at TC2000 charts in a little bit, but I wanted to point out the implied volatility here that we're seeing in gold, and then in the next slide, silver. We are, this is next week's options, 60% IV. I mean, this is north of what Tesla usually is, more than Bitcoin in terms of volatility. That's how much of an explosion we've seen in basically the VIX, or the volatility for GLD. So the moves right now should be expected to be moving in terms of price action and day-to-day ranges. So do keep that in mind. But there's also opportunity here. Personally, gold is still something, we're going to talk about this later, still, I think, in a long-term uptrend. I think, yes, the top could certainly be in for days, weeks, or even a couple of months at this point, but I do think the long-term trajectory is higher. And so, using the high IV for put selling, cash secured puts, or something like that where you want to get in at a cheaper price or discounted price, I think this is where you are starting to get attractive opportunities. If we look at silver, I must have the silver chart out of order here because the silver IV is just ridiculous as well. Silver 10-day rolling returns. This is so hard to see on this chart because it goes back 10 years. But basically we got is overbought as we could see on this chart going back a decade, looking at 10-day rolling returns. And then we essentially plummeted all in the same 5-10 day span to one of the most oversold over the last decade. So again, when you start to get these momentum vertical ascents like we saw in silver, this is the other side of the coin, basically, right? You live and die by the sword. So you're playing these very vertical ascent moves. This is what you can expect when it unwinds and it really flushes out really leverage and margin and those folks that were chasing. These are the really the segment of the market here that was punished the most. And I think, again, we'll look at charts, but silver is basically trading at prices it was trading at 2 weeks ago, right? Not diminishing the absolute monster, move that it saw on Friday, down 28 or 7%, is just ridiculous. But it is, really just resetting itself in this shorter term kind of parabolic move. I also wanted to show Quant Rockets, our momentum model. This was Friday's returns across the universe of rocket stocks. And so again, most of these stocks started off the year just going parabolic, very much like silver. This was the result here on Friday. And so really, when we think about silver and we think about momentum stocks, it was the pressure in the market that was really just putting on probably a lot of retail, but just folks that are out there kind of pushing their account aggressively, borrowing funds, using options, high leverage. And this was the structured unwind, or the pain point that the market was really kind of delivering here on Friday. Another chart that I think is interesting, hasn't changed today, but this is growth versus value. And you can still see here that value stocks are working, right? Growth relative to value is still trending lower and is making lower lows. So I think that's an interesting, again, just reminder of what is working right now in this market. Here's the silver IV, 150%, right? So, 150% implied volatility. This would be, a total unproven micro nano cap stock that has no real track record at all. This is just a tremendous amount of movement that the options market is pricing in right now. If we take a look at market performance this week, again, it was led by oil. Oil was the best performing, safest place to be. S&P held in there at 0.4%. Certainly doesn't tell the whole story because it also had some pretty good ranges, but it managed to eke out a gain. And then all the way at the bottom, 2.71% down for GLD. Here's the way we traded. We tried to lift up, we tried to break out, and then we sort of failed and rolled over. We're going to talk about this as we move into charts later. The VIX did jump a couple of times this week. We got close to 20 and we ended up trailing off into the weekend, but we're still going out around 17. Dollar index, again, we talked about the moves that we saw here out of the dollar. These are very, very large range moves for a currency. 10-year treasury yield was pretty, flat or quiet this week, generally speaking. So up, but didn't really make a meaningful move one way or the other. I think this sector analysis is interesting, right? So there were still plenty of sectors that finished green this week. You really were concentrated in energy, in communication services, in utilities, XLC, communications. This is really Meta that drove this higher, but XLE, XLU, and financials were the standouts here to the upside. If we look at our smart trend filter, so we do have 5 sectors in confirmed uptrends, healthy daily uptrends. We've got 4 here that are kind of neutral, chopping around. And now we have 2 sectors, even though financials held up well this week, they're still in a bearish sort of positioning for our momentum framework. They pulled back pretty sharply to start the year, and so they're trying to find their footing right now. 52-week highs and lows, again, is still dominated by 52-week highs. We did get an uptick this week in stocks hitting 52-week lows, but not super concerning. This data is of Thursday, though. We'll see what Friday brings us. I don't have too much to say about either of those charts. I think Bitcoin is interesting. It's certainly led on the way down. The only saving grace hope that I think we could look at here is that maybe, just maybe, we did get some sort of retest here. We did not undercut the November lows, but we got pretty darn close in sort of after hours trading. This wasn't during regular New York session, but if we can, find some support. I'm not advocating being long Bitcoin here. I think there's just too much damage and structure. I think you really now have to reclaim the 90K area, and then you have something to start to work with. And then, of course, this 95K breakout. So there's work to be done here. This seems like sellers are in control and you're getting an oversold bounce. I just point out that this could be, in hindsight, one of those charts where you look back and you say, yes, that was the retest. That was the spot where we sort of capitulated. Everybody wanted the flush. It didn't happen, and the low was made. We'll see, right? Not calling that, just saying that is a scenario we can all think about. Next week, we can look at ISM PMI services. We get JOLTS data, and then more consumer sentiment data that is on Friday. So let's get into some charts here and take a look at what's going on. All right, we've got TC 2000 open. We're going to start with gold, actually, and then silver, because I think this is sort of the most pressing charts to look at. So if we take a look here at this move, first off, the volume that came in on Friday, $38 billion of notional traded here on GLD. That's quite impressive. And then, of course, you can see this 2-day, look at the range and the expansion of movement here. We had a high to low 8% day on Thursday, and then we followed it up with another 8% move, high to low, intraday range. So when we look at the overall structure here, I guess let's look at a weekly chart first. Weekly chart just paints this massive candle of volume that has come in, a big, kind of rejection at highs, and then we close down 2.85% on the week. So there is a lot of shares trading hands right now. I think that the top is likely in for the next days, weeks, or maybe months, like talked about at the top of the show. But I don't fundamentally believe that this weekly trajectory that is, looking out the next many months or quarters is necessarily done. I don't know that this is the high here in gold for the rest of the year, let's call it. And so, I could be dead wrong in that. My forecasts, I'm a trader, right? I listen to price action fundamentally, and I have rules to guide all of those decisions. But just speaking as someone that's looking at the, kind of just bigger macro picture, it seems like gold is kind of here to stay for the foreseeable future. And so similar to what we experienced in October, but certainly on a smaller scale, don't forget we had a almost 6.5% down day on October 21st. And there were countless messages out there of that's the top, like that's it, it's done. That was it. That was your blow off. And, it took basically a month before, or a little bit longer than that, but 2 months before we could start to take out the old highs, develop a base, and find supply buyers to kind of come back in and absorb that supply. And, again, I wouldn't be that surprised if that's kind of what we're looking at here. I'm not saying we can't go lower. We could easily come back down and test, 400 or so and give a nice 20% correction for GLD. And quite frankly, it sort of deserves it. It's been, moving nonstop higher like a tech stock. And so I think when you get this parabolic advance higher, these are the types of moves that you have to expect as a reset when things start to break and go the other direction. Like we said, we're basically trading at levels seen 2 weeks ago. And so you have to just keep that in context. IV has expanded. I think you can use that opportunistically. Our Galahad trading system, heavy gold, right? We've been heavy gold, and we continue to have a heavy gold position. It's a longer term trend following system. And like I posted on X, I think at the start of the week, we have rules for profit taking, we have rules for outright exits, and then we have outright put insurance protection on our position as well, because we carry such a heavy weight in GLD. And so I think on Friday, our puts were up 100 and some odd percent because of such a violent move down. Now that's not a good thing, because our actual core position far outweighed on losses. The point is you can still try and responsibly have a workflow, a process, rules in place to participate in trends and not just be totally blindsided by moves like this. I think silver obviously is just an epic move. I think this is just one of the biggest moves I've seen in a long time for any market. 29% down in a single day. Take a look at the volume that came in. Take a look at the volume that came in this week. $116 billion traded in SLV. That is monumental. Silver traded and closed down 18.8%. Again, this has been very parabolic. Look at this on a weekly chart. This 1 week, right? It's loud. It screams of a top that just got put in for some duration of time, but there's technically not much technical damage when you look at this trend on a weekly or a monthly basis or on a 200-day moving average, right? Pick your poison. Let's see what a 200-day looks like on silver. Yeah, I mean, look where the 200-day moving average is. I don't particularly use this myself, but we were, let's see. We were 60% above the 200-day moving average, or I guess really if you take it from this direction, we were 150% above the 200-day moving average, right? And so even right now, we haven't even checked back to the 50-day moving average. We are back to levels seen a couple of weeks ago. So gold, silver, trading like meme stocks, loss of concentration, and you're seeing moves like a meme stock. So, hopefully you weren't totally blindsided by this. I still like both areas, but I do think that, you just need to respect the trend, and hopefully you could use IV and some of those option structures to your advantage. All right. So those are sort of the historic moves that are happening there. Let's go to the SPY. SPY, pretty boring in that context. But, we tried to get going here to new highs. We did hit new highs, but then we sort of trailed off and we're back to this range. And so price action is definitely sluggish right now. There's clear, kind of reluctance to just zoom and trend strongly above this 690 area. And so we're feeling the weight of it. The NASDAQ 100, I think, is a little more interesting. We did break out 630. That's sort of the level that we have been talking about for a while now. And we basically said, hey, look, if we can get a breakout over 630, that can be your cue to get involved in technology or large cap or look for a catch-up trade to the upside. And the very sneaky thing about markets is we spent 2 days, I guess 3 days, above 630, and now we're back below it. So we have what looks like, right? Again, this is similar to Bitcoin where it's not a prediction, but let's just keep an open mind. Bitcoin, again, like we talked about from the November high, the November lows in Bitcoin, it's almost like the mirror here in the Qs. Was this the double top retest here in the Qs? And is this the spot that fails and rolls us over, right? It'll all be very obvious in hindsight, and there'll probably be plenty of people who are saying, yes, that's me, I called it. We're not calling it, but we're saying that this here, just smells a little suspicious on the fact that it failed up here at highs, sucked in some people, and then it rejected pretty violently, right? This was a big move on Thursday. We're inside session on Friday. We have lots of tech earnings that are still on deck for next week. So I think, again, like we talked about last week, this is the catch up or kind of the real breakdown and the acceleration in some of the other areas of the market that we're going to see here. The NASDAQ 100 has spent a lot of time and energy going nowhere for 3 months. That is going to lead to some trending move. And so we're still keeping an open mind on whether that trending move is up or down. I think right now it's a total coin flip. We rejected 630. We're back in the range here. So I think you just have to be, pretty nimble, quite frankly. And of course, like I say, you've got earnings next week. So that's kind of the way I'm looking at things. We're going to move along quick because we're going long. XLP, I still think looks great. Posted this a few times on social. Big trend up, high tight base, starting to move again. There is that defensive value, conservative rotation that is still happening here in the market. And it's something that could be, again, these little warning signs where they're starting to stack up. XLE is also working. This breakout's picking up steam and volume. I still have a position here in XLE. Weekly chart, again, has breakout is underway. Big sideways range hasn't gone anywhere, so that continues to work. Let's look at Mag 7 real quick that are reporting next week. So this is Amazon that is set to report. Weekly chart, again, has gone nowhere. Very similar to the Qs here. Sideways now for some time. I don't really have a strong opinion. Chart looks kind of messy, but it could really go either way right now, and I don't have any strong opinions. Google, obviously, I like, but I feel like everybody likes Google, right? The story is clear. They're dominating in so many areas. How priced to perfection are they? That's really the question here. The numbers are going to be great, but what is priced into the stock at this point? I think those will be interesting clues too as we think about the AI trade. Do they blow it out of the park and then does the stock go nowhere? It kind of tells you that things are priced for perfection and there's actually risks to the downside. Again, look at the other side of this trade. Different company, but I'll just always, highlight this. Oracle continues to hit new lows here. And so we've got a problem in the heavy CapEx spenders that are yet to prove ROI, or is just really unclear. And I'm not comparing Oracle to Google, but you get the picture. Not all stocks are treated the same this year. There is definitely dispersion out there. So last, we're going to move quick here to just a few of our momentum picks from our Quant Rockets universe. We made a lot of changes here to the member experience. So we've got a whole new website for members now, much more rich, interactive. I'm not going to debut it or talk about those features here, but this is a glimpse of it. This data is from yesterday. This is basically the 3 stocks on our watch list. First is MOD, so MOD. If we take a look at this stock, right, relative to, where are we? Some of the action here, this was a breakout week, right? So while there was turmoil in momentum land, this is the weekly chart of MOD. Heavy volume, expansion in range, new all-time highs. It's a chase at this point. It's something that we entered into a couple of weeks ago, but it looks good and it is working. SNDK, so of course, everybody's looking at SanDisk now and the memory players. So this one here, big volume, sort of an ominous looking candle today, but still up 6.85%. Earnings were out this week. Continues to be on our list, continues to be something that we are participating in. This is an earlier purchase from December that we are still riding out. And then very similar is Western Digital. This was down 10%, right? This was down 10% on Friday. And again, this reminds me of silver in the terms of, in the sense of parabolic moves up, right? Strong advances higher lead to sharp moves down. This was a 10% move and we're back to levels seen 3 or 4 days ago. So once again, live by the sword, die by the sword type of thing. When you're trading these stocks, position size is so key. Having rules to exit, having rules to risk manage. That is, certainly what we do with our Quant Rockets workflow. So that is it. I'm going to drink some water. My voice is still tough here. Hopefully you survived this week. It was busy. I'm sure next week's going to be equally as volatile, just given earnings, given where markets are, and given some of the moves that we saw this week. So that is it for me. We got links in the description of this show for IBD, our sponsor, and our trading systems. I hope you have a wonderful weekend and hope to see you back here next weekend.